This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Kiyan Zandiyeh, CIO of Sturgeon Capital. Sturgeon is a leading frontier markets investment boutique. Since the establishment of Fund 1 in 2016, they have made 9 investments. Sturgeon focuses on technology-enabled businesses that offer a product or service which solves an unserved, acute pain point for a large addressable market. They seek to be meaningful equity partners alongside entrepreneurs, helping businesses reach their full potential. Kiyan, thank you for joining us.
Pleasure to be speaking with you.
So can you tell us about your background? What did you do before you started investing in early stage companies?
Sure. So I was one of these strange kids that started investing from a young age, roughly at the age of 13. And my focus there was the public markets because at the time, obviously, that was the most accessible to me. I then started a fund in my late teens, also following on kind of investments. I always had more ideas than money. And then from there, I particularly got interested in emerging and frontier markets. At the time, I was working for a well-known economist, Nouri Rubini, or Dr. Doom as he's called, which was famous for predicting a financial crisis. And then over the years, taking a deep look at these countries, what was abundantly clear was that a lot of them were dealing with the hangover of state-dominated economies. And the private sector really wasn't playing much of a role. But once you were traveling to these countries, you would see that this private sector were entrepreneurs in the truest sense of the word. That is, if you wanted a job, you either had to work for the state or by default, you had to be an entrepreneur. And what it developed also over the past 5 to 10 years was just the level of digital infrastructure in these countries. So you saw internet and smartphone penetration go from 10% to nearly 70, 80%. And yet the business models that we've been accustomed to in the more developed world hadn't yet been developed in these countries. And so really wanted to start working on an investment framework and a fund that could focus on these opportunities within these developing countries.
Well, that's great. So what excites you right now?
Well, just the ever-evolving landscape. So in a lot of the countries that we invest in, we're effectively the first venture investors in these countries. And I would argue that to an extent, we have a blank canvas for what the technology ecosystem looks like in these countries over the next 5 to 10 years. So that process of seeing that change, the intellectual exercise of thinking as to how one should strategize around that is what excites me the most.
Great. And so what's your advice for people investing in startups in the space that you work in? What do you tell them to do before they write that first check?
Sure. Well, again, if you're looking at developing country as opposed to a developed one like the US, the level of information available to an investor is obviously very different. So you have to go in and do the hard work or the legwork to be able to get that information necessary to do an appraisal. And the best way to do that, obviously with COVID, it's somewhat difficult, but it's just to travel. What you often find is that the reality is very different to the perception that you have, even if it's an educated perception. By just being there on the ground, given that there's a lack of competition, gives you a significant edge in wanting to allocate capital.
And so what's your advice for people running startups in these frontier tech places? What do you tell them to do before they go out to raise funding or grow their business?
Yeah. So as you can imagine, the funding ecosystem, again, is not as developed as you would find in the US. So in many cases with the companies that we're investing in, we're the first outside investors. So as opposed to the US, where you could run a strategy where you have losses for a period of time in the hope that you can raise capital to then get profitable, what we find in developing countries is that the first order of priority should be profitability. Should be a business that to an extent can stand on its own 2 feet and be sustainable. And that when an investor comes in, it's just to accelerate the growth that you already have.
Great. And so how do you see this segment evolving? How's this industry growing from this point of view?
So what we're seeing over the past year especially is a lot of success stories coming out of developing countries. You saw Stripe acquire a payments provider in Africa. Probably not on the radar of a lot of your listeners, but there was a company out of Kazakhstan, which is a country with a population of 18 million, which was a fintech/marketplace business. And they IPO'd a few weeks ago at a $6.5 billion valuation. And that's a company that makes $400-500 million in net income. So it's not particularly a crazy valuation. Now, the benefit of such events or news is that it really boosts the incentives of early stage entrepreneurs to see and believe that they can truly be successful and that there's an opportunity for them to monetize their efforts. And so that we find fascinating.
Great. And so what's the biggest change you see in these economies that you're working with now?
It's really how these technology companies are changing the landscape. I mean, if we take a particularly esoteric country like Uzbekistan, 50% of the population that do not have a bank account, and you have 2% of the population that's ever taken a loan from a financial institution. And it's really the technology companies there that are meeting the requirements of that challenge, as opposed to traditional banks. And so you're seeing really technology companies change the nature of day-to-day life for the average population. And that evolving landscape we find particularly fascinating.
Great. So what exactly is your investment thesis? What do you look for in a startup to fund?
So our investment thesis is first to look at what business models that we know well have worked in the rest of the world. And when I say worked, I mean that have shown clear positive unit economics, that are scalable, and as you pointed out in your introduction, meet an acute pain point of society. What we ideally look for is a business that has been operating for a number of years, has shown a clear track record of being able to become the market leader, and then providing the capital and hopefully expertise and advice to really help those companies accelerate their growth.
Right. And do you have any startups that fit that thesis? Can you mention maybe one or two companies that are a good fit?
Yeah, so our largest investment at the moment is a company called Zandiyeh, and effectively it runs an e-commerce marketplace in Central Asia, and today is the largest business within that area. It started in November 2018, is the most downloaded shopping app in every country it operates in, has 6.5 million downloads. Over the past year has really benefited from COVID in the sense that its headline GMV back in March was an annualized $2 million. As of speaking, that's $50 million, and has been growing at about 80% a month. So that fits our criteria in the sense that we know e-commerce marketplaces have worked across the world. We've seen why they've worked. And this business has been great at localizing the solution to really bring e-commerce to the broader population.
Great. And so what are the primary challenges your startups face when they launch a business? Of course, it's in an undeveloped area, but if you had to call out one or two things that you think are the key critical factors, what are those?
So if you compare it to the US, I would say the level of infrastructure available for a startup to really be able to scale is very strong. So you have logistics providers, marketing, you have everything that you need to be able to start a company. I mean, in the case of e-commerce that we were talking about, you typically don't even have a logistics solution. In terms of payments, you're looking at, as I said, 50% of the population doesn't have a bank account, and less than 10% of the population that has Visa or MasterCard. So as a startup, you really have to be integral in building up the infrastructure necessary for your business to work, as opposed to it being immediately available to you. As an investor, one challenge, as I alluded to earlier, is simply being able to collect the information you need to make an appraisal to understand whether you would want to invest or not. But again, by being on the ground, by being committed, these are all problems that are solvable. Yeah.
Great. Well, a moment ago, you mentioned that the challenge for the investor was finding the information because it's not readily available. It takes a lot of legwork. Aside from that, what other challenges do investors face in these areas?
Sure. On a very basic level, it's a language thing. So a lot of these countries, some of the entrepreneurs and some of the best opportunities that we funded have actually been founders that don't speak English. And so on our team, we have to have individuals that obviously are capable of speaking the language. You also don't have typically a strong ecosystem for later stage funding. And so our role as an investor is to be early stage investors, to really help the company develop. And then once they've developed, to proactively go out and to reach out to co-investors across the globe to provide that later stage funding. So it's really the full stack of services that you have to be able to provide as an investor to these companies.
Right. Well, you mentioned fintech as an application you see come up in these areas. What other applications or sectors do you think are good opportunities for investors to pursue?
Yeah, so we see fintech as an added service, but what you have in the US is you have fintechs in the sense of online banks that are trying to compete with traditional banks. Our approach is somewhat different. Is we say, what are the business models that can capture a large customer base, that have enough touch points with that customer base, and through that process can collect a lot of data on that customer base to then overlay financial services. So two examples. One is obviously e-commerce, where everyone needs to shop. E-commerce is generally known to be a more efficient solution. And by collecting a large customer base there, we can then overlay financial services, that is, let's say, consumer loans, to not only accelerate purchases on e-commerce, but to be a lender as well. Similar with SaaS software focusing to small to mid-sized businesses, which typically dominate the economies in these countries. Again, the solution there is you provide software where the economics are well known as high margins, high recurring revenue. But for the provision of that software, you're collecting a lot of data on the underlying customer base. You have a captive customer base because obviously the very essence of software, the recurring revenues are very high. And then again, we can overlay financial services on top of that. So one of our portfolio investments is a company that provides inventory management and account management software to small to mid-sized businesses. And the beauty there is through provision of the software, you're collecting data on all of these companies' inventory management cycle, cash management cycle, which is extremely valuable data for banks, which you can then use their balance sheet for to start providing working capital loans to these merchants as well.
Which countries are you spending the most time in these days?
Yeah, so our focus really is the ex-Soviet Union, Central Asian countries. So you've seen, as I said, tech ecosystems developed in Africa and Southeast Asia, but this region has really been overlooked. In combined, it has 140 million people. Demographics are great. There's roughly 60% under the age of 35. And as I said, you have very strong digital infrastructure. You have smartphone internet penetration of 70, 80%. And so for us, it's really the area where the business models, again, that we've been accustomed to really haven't been developed. There's a lack of a venture ecosystem, which for us is an opportunity.
And what do you find the education to be like? What level do people normally have? And does that help the startup world at all?
Well, the beauty is that you have the Soviet hangover, which is very high education rates and focused on the hard sciences, which one can argue is the best form of education you can have. So typically what you find are graduates are engineering, maths, physics, and computer science. So the raw ingredients are really there as well, which if you combine with my earlier point that the very nature of the population is entrepreneurial, it makes quite a strong confluence of factors.
You find there's a strong software development component. They do a lot of outsourced software development for the rest of the world, or they're just building their own companies for their own purposes and providing software support that way?
A bit of both. So, for example, in a country like Ukraine, you have a lot of outsourced developers for let's say, US or UK or European companies. But obviously, they see the opportunity set themselves to use their skills to build businesses. So I would say it's the hybrid of the two.
Oh, great. And do you find it easy to get to these places, or is it very difficult from where you are?
Well, typically, the benefit of being in London, obviously pre-COVID, is that it's quite easy to travel anywhere you want. Obviously, during COVID, it's somewhat more difficult. But what we do is we have a team on the ground in every country that we operate in, which during this period has allowed us to continue to invest and monitor our existing portfolio in an efficient and effective manner.
Very good. So, well, in the last few minutes that we have here, what else should we cover that we haven't?
I think one interesting dynamic that you see in emerging markets within the tech space that you don't really have in countries like the US or the UK is the emergence of what you can call super apps. So if you look at what Alibaba or Ant Financial is, I would argue that that business model probably wouldn't be able to be created in the US. That is, if you look at Ant Financial in the space of 10 years, it's created a 200 billion financial services business, which has effectively come out of an e-commerce marketplace. And what's interesting is if you think rationally, Amazon, they should probably be the largest consumer lender or financial services business in the US. But what you have there is regulatory block. You don't really have that in developing countries. And so you have the ability for companies to really, through technology, be able to touch every aspect of a consumer's life, whether it be e-commerce, whether it be financial services, whether it be for them to be able to pay for their utility bills or logistics. You're seeing companies provide an end-to-end solution off the back of one initial business that captures a very large customer base.
So it sounds like regulatory really hasn't been put in place at this point and maybe not coming for a while. Is that your take on it?
Yeah, I mean, I think a lot of these countries, the regulators are probably slow to act. And what you see is companies becoming dominant market players. And frankly, as a government, once that has happened, there's nothing you can do. You could shut them down, but that would upset a lot of the population which are benefiting from the services. You could try and take the asset away, but there is no assets. It's intangible value. And so the worst that happens is probably what happened in China, where effectively the government says, well, share the data with us, but we'll allow you to operate in a normal manner. So that's kind of the lay of the land, so to speak.
I see. Well, that's great. Well, how best for listeners to get back in touch with you?
Sure. Well, I think my email will be on the podcast notes, and similarly with my colleague Alex Branton. And if anyone, either entrepreneur or investor, is interested to learn more, the best way is just get directly in touch.
Great. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Sure. Thank you very much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.